Welcome everyone. In this video, I'm going to do a fundamental analysis on Palantir technologies, and I'm going to touch the charts and price action by the end of the video. I know it's not a favorite topic among most of you, but price action, I believe it matters. At the end of the video, I will provide full details on my thesis and why I think Palantir right now is not a buy. In fact, I believe that until April 2nd, holding shares in this company presents a risk that I will discuss in just a moment. Great, so let's go through the latest earnings report to understand what's going on in the company. Why is there so much hype around Palantir? And is this hype justified or not? So let's go into it. We have full year 2024, some of the highlights during the year. US revenue is up by 38% year over year. And what I find surprising is that in this list, you don't see Europe. Where is Europe? And if you look into the earnings call transcript from Q4, which I think happened on February 3rd or somewhere around February, we have the CEO that actually mentioned some frustration. That's what I'm reading from the earnings call transcript. I see some frustration from the CEO where he states that in Europe they are doing the best, but things are quite anemic there, which makes sense because I live in Europe and I can assure you that the AI adoption in this side of the Atlantic, it's not the same as in the other side of the Atlantic, if you know what I mean. And I do agree with the CEO that Europe is falling behind significantly, and it's several years behind the US when it comes to AI adoption. In fact, most of companies that I know here, they're quite skeptical on AI, and they think that it's just a scam. It's just hype around that. They really don't know what it is. Like if you ask, a high level management, if you ask what's an AI agent, they're like, what's that? So they really don't know what they're missing. That's the dangerous part of it. CEO is complaining about that. So coming back to the topic, 13% of the revenue in 2024 was generated in Europe, whereas that revenue grew at 4%. That's nothing because US revenue is up 38%. So that's a 10x growth in this region. You can see even more complaints from the CEO. I like it. For example, here it says, and what's really happening there in Europe is that people are reading literally basically PowerPoints of how you did tech installations in the 50s, and that's what they are doing. And it's right. I mean, the lack of proactiveness in this side of the Atlantic, it's just sad to see, because as he said, I believe it was Q3 24, he said that there are two types of companies. There will be companies that thrive and companies that are dead. So I'm just concerned that Europe is falling behind in the AI strategy, and the CEO may be right. In any case, the market is looking at the US revenue. The market, I believe, couldn't care less about Europe. So we have US commercial revenue up by 54%, and US government revenue is up by 30%. In fact, if you have a look at the revenue, this is a chart where you can see the actual breakdown between government and commercial. You can see that government, it's still over 50. I wouldn't say the majority of revenue, because it's about 50 to 60% of the total revenue. So government is still outpacing commercial. And I believe the market doesn't like that. So the market is more excited about commercial. And the main reason I think so is because of the scalability of the commercial segment. And I'm looking here at a time frame of 10 years. So I'm not talking about this administration or the next administration. I'm talking about 3 administrations into the future. What will be this revenue distribution? And I believe that with time, the company is going to saturate the government segment, particularly in the US. It's not going to happen this year. It's not going to happen in the next 4 years. But with time, in that time frame of, I believe, 10 years, little by little, the company is going to reach a point where, they have it all. They have all the contracts, and I believe that, of course, you have the US and you have the allies. The saturation in this segment is quite possible, and I believe it's going to happen in the next 5 to 10 years. That said, in commercial, the total addressable market is, let's see, every enterprise in the face of the planet that is generating data and needs that data to take decisions. So I think the potential is just insane in the commercial segment. And right now, most of this revenue, as I said, is coming from the US. And it's going to take many years until the US commercial segment is going to become saturated. And by the time that happens, which again is going to be decades, by the time that happens, I believe Europe is going to wake up. So that's where the company is going to shift strategy, and they're going to focus on expanding on Europe. So right now, Europe is Palantir's plan B, I believe. And most of the focus right now happens in the US. I just wanted to clarify something here with the revenue. So I do agree that the market is more, for the reason I mentioned before, it's more concentrated in the commercial segment. That said, if we look at the growth, what you see here are year-over-year revenue growth per segment. You can see that the government segment, this line right here, the one below, is actually increasing since Q4 2023. So back then, revenue growth was 10%, and now the revenue growth is 40%, whereas the revenue growth rate in the commercial segment has been relatively stagnant at about 31%. So that doesn't mean that revenue is stagnant. It means that the revenue growth, yes, the revenue growth rate is pretty much the same. Yeah. So I still think there is potential in government, and I don't agree with some of the bulls on Palantir that they don't like the government segment as much as I do. So why do I like it? Have a look. So we have here Doge. You probably have seen this page before. This is the live tracker. As you probably know, Doge has a target of 2 trillion USD in savings in the next 466 days. So that's going to be by mid 2026. So far, they achieved about 5% of the target. And this number, 2 trillion, by the way, is not a coincidence. So if we look at treasury data, we have that the fiscal deficit, the federal deficit, in full year 2024, it was 1.8 trillion. In other words, you have 1.8 trillion more expenses than revenue that the federal government collects. So that's a big deficit. It's not as big as in 2020, when you know what happened, but it's still a significant amount. And Doge is there to cost cut. So here is where people were getting a bit nervous about the revenue in the government segment. And I believe that those worries are not well fundamented because they don't understand what the Gotham platform does. And I believe that the efficiency that different agencies can obtain using that I would say data analysis platform, because they don't have AIP yet. Maybe Project Maven is going to implement it. I'm not sure about the details. But even from a data analysis perspective, leaving aside AI, just from a data analysis perspective, that alone is going to help agencies to cost cut. And I believe that that platform makes sense in the current macroeconomic environment. So yes, Doge is going to cost cut. However, those agencies that are now pressed to show savings are going to be more motivated to use these platforms, particularly the Gotham platform, on their advantage. So that's my thesis on the government segment. I believe that the government segment will continue at a pace of anywhere between 40 and 50. I don't think 54%, what we've seen in 2022 was quite decent, but just remember that back in 21, revenue was not as high. So that's why we have such a high growth rate. I don't know. I would expect somewhere around 50% and probably stabilization around Q2, Q3 this year. So government, I think there is still potential there. Great. Moving on. Many topics. So apologize if I do too many tangents. Great. So the next is the rule of 40. So what's that? We have SaaS companies. Yeah. So software as a service. And we have investors in these companies. Yeah. So one of the heuristics, I would say, that investors use, a rule of thumb, if you will, is companies in the SaaS space, like Palantir is, because let's be honest, they offer products which is, it can be licensed. I think I don't know exactly the details, but I think it's mainly subscription based. Although it's not as easy as a Netflix subscription where you can just purchase it from the website. It takes more than that. But my point is that Palantir falls within this category. So investors, they like to see a combination of revenue growth and margins. So if revenue growth as a percentage plus margins as a percentage, if that adds up to 40, then that company makes sense. And when I say it makes sense to trade at a premium over its peers. And the higher this score, the higher it could trade over that expected valuation. And you all know, Palantir is not a cheap stock. You all know that. However, the score that the company has, if we consider margins and revenue growth, is spectacular. So I have it here. Reconciliation of the rule of 40. We have Q4 2024 data, which is 81%. So it's double that threshold where, as I said before, anything below 40 doesn't make sense. Anything above, companies, they could trade at these rich premiums. So what Palantir is using is, as I said, year-over-year revenue growth. And in terms of margins, they're using adjusted operating margins. Quick side notes, you can use, most of the times, adjusted margins are used, not GAAP. That was one of the points I wanted to clarify. But the other one is that you can use free cash flow margins, you can use EBITDA margins, and some people use operating income margins. So others could use net income margins as well. So it's quite open, the topic on which margins to use, because it's not a hard rule on that. But yeah, overall that has to be above 40. So in full year 24, that's 68. So from this perspective, things are not bad at all. So moving on to the next topic, we have US commercial. This is, I believe, one of the most important segments, I would say sub-segments of the company, because, as I said before, the growth in Europe is quite slow. And, the CEO, he's right. He's right to complain because it's true. Like, I live in Europe, and as I said, companies, they don't really believe in AI. They think it's the next gimmick or, the next thing, but they really don't strive to implement and to learn and to specialize on this new technology. So I believe they're going to fall behind. That said, revenue for the company, the US commercial customer, not revenue, but the customer count is up by 73% year over year. So that's quite significant because at the end of 2023, they had 221 customers, and that's TTM, so trailing 12 months. And this year, in 2024, they have 382. That's a significant increase. We can see here two charts where you can see the customer count that takes into account everything. So that's both government, US, Europe, everywhere. And then we have commercial customer count, both in the US and Europe. And you can see the growth is impressive as well, 43% and 52% year over year. And again, these are trailing 12 months. So that doesn't mean that we have 571 active customers. It means that over the last 12 months, the company has worked with 571 customers. Great. That said, let's go to the next topic, which is the number of deals. Look, I'm a traditional, or I was a traditional value investor, and I used to dabble in stocks that, $5, anywhere between $5 and $1, absolute horrible fundamentals, and very small companies, market caps below 300 million. So small companies. And one of the things that I do when I analyze them, I look at the press releases, also in the SEC directory, and just one deal, just they secure one deal with the company or one partnership, and that is enough to make it to the headlines. So they release a PR saying that, okay, we have a partnership, we have a deal secured, etc. Well, in Q4 2024, Palantir secured 129 of these deals, and those were at least 1 million. And out of those, we have 58 that were at least 5 million and 32 that were at least 10 million. So just try to imagine if the company was to release one PR per deal secured. It would be insane. So they just don't do it. And that just tells you the confidence that the company has in securing deals. Is, when they secure deals with huge corporations and they don't release a PR saying that we closed the partnership with, I don't know, JP Morgan. Probably they don't have a partnership, but as an example, they mostly don't care about these things. It's usual business for them. Now, moving on to the next point. Actually, I just wanted to clarify on the deals. So we have the quarterly data, and we have a breakdown of, as I said, the number of customers that signed the contract over 1 million, over 5, and over 10. So what I want to see here is growth in the 10 million range, because those are big enterprises. I assume probably enterprises trading at S&P 500. And what I like to see here is the trailing 12-month data, because quarterly data, it's quite jumpy. It goes from 16 contracts in Q3 to 32 contracts over 10 million. And it's quite irregular because of the timing of these contracts. A company, Palantir, I believe, they can be in contact with an enterprise for a 10 million contract. And the enterprise can be like, amazing, I want to do that. But I'm not going to be able to sign the contract up until the end of the year, because that's when my organization gives me the budget so I can cascade it to you. And that's why the TTM data, the trailing 12 months, is more important, because it's showing you, the number of customers or number of deals in the past year. So there is less variation there. So this is very important, and this is one of the charts that I like to keep an eye on, because I want to see the adoption in the big companies, large corporations. If I see this spiking up, I would expect to see significant improvements in efficiency in the corporations in the US. So something to keep an eye on, also from macroeconomic perspective mainly. Great. Now, other points. Sorry, we have a lot of stuff to talk about. So the operating metrics, this is again just to emphasize and to double down on the growth of the company. Billings is up by 25% over the past 2 quarters. That's not bad at all. Overall, we have almost 3 billion in billings, and that is in Q4 alone. If we look at the data for the entire year, I think I should have it somewhere. Probably. Sorry, that is the trailing 12 month. Apologize. So the quarterly is 779, and this is for the past year, 2.95. I always like to see quarterly, but I switch between those, so that's why. Yeah, I have to get used to this screener. Yeah, usually I use TradingView, but for some reasons it's down today. I don't know. It's maybe only for me. Anyways, let's move on. So we have billings, 28% up, 49% up, and of course this depends. As I said, it varies from quarter to quarter based on those timings with large corporations. So I wouldn't be surprised to see variations here this year. But as always, look at the TTM data, and that will tell you the trend. Perfect. And you can see the number of customers as well and the customer growth. So that said, considering this customer growth, which if you look at trailing 12 months, well, the data doesn't adjust, so you can see the total number of customers as of December 31st, 711. That's 43% up. Now, if we look at the growth in free cash flows, yeah, we're talking about a 54% growth in the past quarter. So that's year over year. So overall, the company has generated 557 million in free cash flows. And that leads to a free cash flow margin of 55%. So just to put that into perspective, out of the revenue that the company generates, 55% of that is translated into free cash flows. So I don't know. To me, that looks absolutely stunning. And yes, some people can say, yeah, but the cash flow per share is quite low. It's barely 20 cents, and the share price is over 90. It's 95 actually. So yeah, on a valuation basis, I do agree that the company is stretched. But the people who invest in the company, I believe they don't look at valuation as much as for other stocks. And the reason is because of the potential of the company, particularly in the US. So I just wanted to emphasize on this topic. And another thing I wanted to emphasize on is, yeah, people can say, yeah, but that's nothing. Just look at Salesforce. They generate 3.8 billion. So how much is that? Over 9 times Palantir's. So that's a significant difference between Salesforce and Palantir. That said, let's look at the margins. 38% in Q4 for Salesforce and 55% for Palantir. So the difference is abysmal, and Palantir is way better positioned to capture growth. And what I find surprising is that when you look at the two companies, Palantir and Salesforce, Palantir is growing significantly more than Salesforce, yet it has higher margins, higher free cash flow margins. So usually, I don't see that every day in the markets. And I believe that's one of the reasons why Palantir has this much attention, is because it's able to grow and to generate very attractive free cash flows. Now, of course, these cash flows, they end up, not all of them, but a good part of them, they end up in reserves. So the company has 5.2 billion in cash equivalents, and US Treasury securities, and they have no debt. So they are very well positioned. If we have a look, in fact, at the adjusted free cash flow, we're talking about a 63% margin. So if we were to use that rule of 80 using adjusted free cash flow, just this margin alone is over 40, let alone the revenue growth, which was, how much was that? I believe like 29, 30 almost. So if we use this parameter, we're talking about a rule of 40 in the 90s. So not bad. And yeah, so my main point with this is that the free cash flow the company generates, it's able to go into the reserves, and the company it's debt free. So that's perfect. Perfect. Now, one thing I want to emphasize on is on the fundamentals. So when you look at, Seeking Alpha, when you look at Stock Rover, TradingView, you probably see the gap figures, and I believe a certain number of investors, they don't read earnings, and they just log in and they're like, okay, let me see what's the summary. Oh, net income is down. Oh, what's going on? Operating income is down as well. So what the company is trying to convey with these two slides is that the gap decline in net income is because of a one-off expense. So if you discount for this expense, gap net income will have grown significantly compared to always. So this will be a record value. And the same will have happened for gap operating income. However, that's not the case. So in GAAP, we have to take into account expenses, and one of these expenses is related to market vesting SARs. So that's stock appreciation rights. What's that? So essentially, employees, they are granted a certain number of SARs at a certain price. Yeah, so imagine Palantir's price, it's about $20. And employees or management, they are granted with these contracts. So when the stock price goes up above a certain value, which is usually determined when the SARs are released, so when that stock price goes up, the employee is able to materialize the SARs. Usually that is either in the form of cash or shares. So what happened is that Q4 last year, it was a spectacular year for the share price. And those SARs, the requirements, were successfully achieved. And that means that employees are able now to get the reward. And the reward was 131 million in SARs. So that was the expense that the company accounted to. And again, it was a one-time expense. And I'm really curious to see how this is going to look like in 25 and 26. I'm curious to know the details. So something to keep an eye on for the next earnings. Great. I think the last topic I want to touch base on will be guidance for Q1 25 and also for the entire year. So let's start first for the entire year. We have revenue in the range of 3.74 to 3.76 billion. So let's look at what analysts are expecting. So if you go to Seeking Alpha, we have December 25. Yeah, so that's the entire year 25. The estimate for revenue is 3.77 billion. So that's slightly above the upper range of the company. And it's not a surprise because the company has eviscerated earnings in the past, and it wouldn't be a surprise to see them doing this again. When it comes to the other factors of the guidance, you have U.S. commercial revenue, which will, if this guidance is achieved, it will represent 54% year-over-year growth. So that's significant because this is the segment that the market is looking at. And then we have the adjusted free cash flow, which they estimate between 1.5 and 1.7 billion. So that's quite significant when compared to 2024 values. Great. So the last point is the price target. So, we have about 18 analysts. They have 12-month price forecasts for Palantir. And this is the forecast. Usually I don't look at this, to be honest. I mean, they know significantly better than I do. Don't get me wrong. But they tend to not be really accurate. So, can this be, above 125? Yes. Can it go below 20? Yes. And there is a lot of uncertainty. And I believe right now, external factors are pressuring the stock. And that's why I don't think there is an asymmetric upside for Palantir before April 2nd. So let me explain why. We have, of course, the stock price. Yeah. So if we compare that, I use the SPY, to gauge for the markets, for the broader markets in the US. You can see the sell-off from February 20th almost. It's pretty much in line with what has been going on in the S&P 500. So right now, all the US equities that are trading at a significant valuation, at a rich valuation, they are getting a haircut on the share price. And what I believe is going to happen in the next few days is a sell on the news crash. So you can see that since Friday, March 21st, the share price, the S&P has been increasing, has been rallying in anticipation of favorable tariffs. Yeah, so favorable tariffs, I mean tariffs that are not going to take into account certain sectors. So they're going to be specific to countries, and probably or possibly April 2nd, it's not going to be a day where tariffs are going to be applied for 25% for absolutely every single, for example, car that it's imported into the US. So there will be exceptions. There will be one-to-one exceptions. Reciprocal tariffs are going to be probably made effective that day, but not sector-wide tariffs, which is great news. That said, the market is pricing in this news, and this is the risk. This is the risk that I'm saying, that I'm talking about. I did a video yesterday. I'm going to do probably an update later on this week. And you will see that this is going to, I predict, is going to rally in anticipation of April 2nd. And I believe this date, there's going to be a sell on the news, because the market is already pricing in that positive announcement that sector-wide tariffs are not enforced on April 2nd. So that's why it's so dangerous to hold Palantir, because it has a beta that is following the SPY. So I don't know, if there is a big sell-off on April 2nd, I would rather buy the dip then than buy now and then see the price going down by 10%, 15%, and then having less capital to buy at that lower price. So that's my view on Palantir. I think I covered pretty much most of the topics that I wanted to cover. Overall, my rating is a neutral, although I do think that the AIP platform, of course, which is built on top of the Foundry platform, will be adopted in the US commercial segment by many more organizations, because it simply makes sense. So it's a platform that enables AI agents to replace white collar jobs. It's as simple as that. That's, to me, is the easiest way I can explain it. And of course, it's not going to replace all of them, just the ones that have repetitive tasks where somebody, a human, has to check information somewhere, and based on that information, they have to generate either a report or charts or graphs or presentations. All that is easily replaceable by an AI agent. And of course, you will still have some management that is going to oversee what the AI agents are doing. So not all the jobs are going to disappear. Great. Thanks one more time for watching a very long video. I'm planning to keep this format, and I hope to see you in the next one.